Good afternoon, everybody. This is Dan Hussey with AlgoDayTrader.com, bringing you our call this the London session recap for August 2nd, 2012. It's about an hour after the London close, and I would actually like to potentially begin here with the FTSE and the DAX. So give me one moment. Let's bring those charts over. Stepping back to like 4-hour charts on both markets. We have held our extension long levels, and we're making our way to targets. The FTSE looks to have actually hit its target for its extension long. So we're going to be taking now, again, this is the extension levels drawn from a 6,400 anchor to our prior highs at 6,660. The new anchor is up to our new highs from today. So we could potentially see a pullback in the FTSE all the way into the next in the series extension long, which resides at a 6560. Okay. Today, however, we have seen the entry lows from our target or from our prior extension to highs trade a 50% line here. So there is the case for this 50% line holding and taking us up through highs, which would be breaking out of highs of our prior extension long. Okay, see how the new target takes us above the old target? But we have to anticipate a same anchor new high pullback into the 65-60 area. Okay, so again, this is an anchor drawn from the 6,400 anchor to new highs would be our next full pullback on the FTSE. The DAX has held its extension and is heading towards the extension is drawn from the highs on June 26th at about 8,036 level. Anchor to highs here anchor to highs here had it filled at an 82.26. We are about halfway to the target up here, and going down to a 5-minute chart, we can actually see we can actually see an anchor high where we gapped up, held an extension long. Same anchor new high is now actually holding, retrading this extension. Okay, there is a short off the high that has not broken yet, so we need to watch that as well. But for the most part, we're looking for longs that are taking us towards this 4-hour target, which resides up above us at an 8,500 level. Okay, breaking of this extension short, or I'm sorry, this 5-minute extension long, if that happens to break, we'd be looking for the full pullback. Okay, the full pullback into, it's about an 83.30. But for right now, this extension is holding, and we're looking for upside targets now in the short term around a 8,500 level. Now the S&P 500. We are still anticipating heading into the 1736 targets from our daily extension longs. Okay, these 1736 targets are now only 30 points away from a 1577 entry. Going down to an hourly chart, you can clearly see the extension long drawn from a 1652 anchor to highs. We've been talking about this, and we still technically have upside targets of a 1705. We came really close to them, but we haven't filled those targets yet. The full long that traded with FOMC on Wednesday today has hit its targets. We need to draw up the entry lows to target highs next in the series full pullback. Although today we did seem to get support from a reverse engineered extension drawn from the highs at 1688, going down to 15 minutes now. We filled our gap, hence the rally this afternoon, or into the lunch hour. We have filled our gap, and ultimately, if we head up and into the 1705 targets, I'm going to be marking the highs here at a 1693 or 92.75, because if we head up into the 1705, 1707 targets that we currently have, I will be drawing using the anchor from 1692 anchor to highs as an extension long. The reason being is that this original traditional is the big trade that traded, and because we're holding this extension, which I'm actually going to mark as purple because it's never one we would have taken, right? We're reverse engineering a support level that has in fact that has held, and this support level excuse me, one moment, messed that up. There you go. This support level is defending and keeping us from trading into the next in the series long, which means the original long that did trade to target has been breaking out of targets. If you don't pull into the next in the series, or you don't pull full halfway back, then you're moving in extensions, or you're holding a trade that could move you into extensions. So we're anticipating, if this goes to target, that we will be in extensions after that and start drawing the extension from a 1692, right? Because every trend, every trade has there's a reason we're going to, we're moving to an area in the market, and right now we're watching the S&P 500 potentially breaking out of its targets by not trading back into the next in the series of measured moves, which would be at a 1692. All right, we definitely could, but not yet. The YM, stepping back to a daily chart, we are in the extension long drawn from a we are in an extension long drawn from 1360.10 highs to highs, or using the 1338 anchor. Either way, we are in an extension long heading towards the 16,000 level. Okay, on the daily, it's very similar to the 1738 targets on the S&P. Okay, going down to an hourly chart now. In the short term, there we go. In the short term, we were able to reverse engineer an extension long drawn from the 15,115 level anchor to highs. This has an upside target of 15,670, and inside this trade we've held a halfway back long, defended the 61.8 line, and actually now going back here, looking back on this, I think it's a little clearer what the Dow is doing. It's actually in its next in the series. So the Dow traded a long to target, okay, and is now using the entry lows to target highs. The next in the series long is actually holding. It got a little choppy here with the news, but it looks like we are in a next in the series long in the Dow. We've broken the short, and we have now a micro potential pullback in the direction of our upside targets, okay? So the Dow is definitely looking a lot more constructive, a lot cleaner, and a much more easily visible trend than the S&P 500. We traded up into a gap fill. That's the resistance we're seeing this morning. But other than that, it's very similar to the S&P, maybe even more technical than the S&P right now. The dollar yen. Stepping out to an hourly chart, we're coming out of a 4-hour ambush long from the 97.70s. This trade has an upside target of a 103.40. Okay, we have broken or traded into a full short off the high. Our news came out this morning, and we traded immediately back down into the full long. Going down to a 5-minute chart, we're able to see that we traded a full short off the high into this long. That trade hit its targets. It's going to be very important for the dollar yen to break the 99.13s 99.14s, that is the 61.8 line of the next in the series measured move short that potentially could take us down and through our support and break the hourly long. And then we would consider ourselves in a range between the full short and this ambush long. So that would be of technical significance to break the 99.13s, and then actually, if that had happened, you can buy a little ambush short here, and it's in the potential looking for the swing up to fill all of our long targets. But for right now, the dollar yen is actually a risky buy. The first bounce off this support level, you can see how the 38.2 was hit. So longs have gotten free. Same thing with this. The 4-hour time frame, longs have definitely gotten free, but still have shorts. So there's definitely, it's looking like maybe the U.S. dollar is going to become a little bit choppier, a little bit less clear of a trend, and maybe you're going to see the trend continue in other pairs, in other crosses. For example, the Euro Aussie. In the Euro Aussie, we front ran our extension long level, very frustrating. I have to kind of reverse engineer a 45-43 anchor to highs here to see it filling and going to target. Regardless, step back to our 4-hour chart. For our big daily swing, you can drag up to new highs here, but this anchor drawn from a 44.80 to highs was front run. I guess we're going to have to consider this trade having occurred. It's really tough to do, but that's why I'm more inclined to reverse engineer the level that actually was. And going down to a 15-minute chart, I can show you exactly what I did here. So this big rally up, there's got to be some high here that we started using to hold for extensions. And I got the 45.40s just by simply seeing that this was the first level that seemed to really hold these first micro extension longs. Taking that to same anchor new high, it is the level that we would have traded and looks like held here in this last dip where we were actually trying to get long. We know that the dollar or the Euro Aussie off prior highs to the entry lows here broke a short, pulled into its ambush long, and it was just in long since then. The long went to target. We had a news event. It pulled immediately into the full long, and that trade's gone to target. So now I'm starting to look for the next in the series long from entry lows to target highs here, which it looks like it may have traded a front run of 6 pips already. Okay, so this is very reminiscent. This price action is very reminiscent of what we just had over here. These two areas are very similar to each other right now in terms of holding a traditional, pulling back into a full long, holding next in series, and then this right here would be about right in here, so there's a potential breakout maybe. Not saying it is, not saying get long, but we do have upside targets of about the 150 area, and from 149.75 to 150 is our upside target. So have to kind of keep an eye on this. The British pound. Pound has actually been pretty bullish. So stepping back to a daily chart, we broke the shorts off of prior highs, and we pulled into an ambush long. Tony, I believe, was the one who pointed this out to us in the room, and he actually, I think, took this trade and it got almost immediately free. Going down to a 4-hour chart, we can see how we tested and retested this level until finally today we've tested and traded up into the 61.8 line of the full short. So this full short, going down to an hourly time frame, rather 15-minute time frame, is still holding. It's not a trade I would take because it's against this big ambush long, but it is there, and we have gotten and we are able to see a series of micros off the low. The pound pulled into a full long. Then it did highs to highs extension, defended a 61.8 line, went to target. So now same anchor, new high of this extension has a support level of 52.44 and has upside targets of a 53.40, which would break the full short. At that time, that's when I would be looking for the full pullback in an ambush 15-minute long in the direction of the 4-hour or daily ambush long. So just want to make everyone aware that it looks like there might be some dollar weakness if the pound has anything to say about it. Considering the pound has been one of the weaker currencies, the dollar showing weakness against it is a sign of caution. So let's talk about the euro US dollar here. Really tough chart to trade. Really tough chart to trade. We have the full pullback here, and that's even getting a massive front run. So I don't have it as traded yet, but I can't ignore the fact that we did actually break the full short off the prior highs, which means we need to look for an ambush long. The caveat here is that with all this news, it rallied up hard and actually pulled into a full long after the news. And now we're actually holding a long inside of that level with upside targets of a 33.31. So maybe after the 33.31s there'll be another ambush, or it could very well just continue its trend. I'm kind of glad I'm sitting out the euro here because it's just not the clearest trend right now and has not given us any opportunity to get in, even if we wanted to. So I still have support at 31.75s and then down at 30.50s. If we trade down to 30.50s, I would be a buyer, but that's about the only trade right now in the euro that I'm looking at, and it's it would be a 30.50 buy, a 29.80 or 75 stop, looking for a move to a 35. The 35 area. We'd front run the 35 area, probably do 34 like 90s. Okay, so I'm cautiously optimistic about the euro continuing higher, but we had a series of longs. They broke. It pulled short. And that short's now broken. You could have gotten free, but you would have been shaken out of it here. So maybe this is like an A, B, C, and then we'll get a C wave down into the long. But for right now, I'm kind of glad to be sitting out the euro, and I definitely wouldn't buy anything until we go below prior lows. So that's just me, maybe. Maybe I'm wrong, but the euro has not been entirely clear. The Aussie US dollar. Really interesting chart, actually. We traded straight up into an extension short, and this extension short, let's clear this chart off. Stepping back actually to the 4-hour chart, I want to remind everybody that the original anchor we had been using this summer was a 99.60 anchor to lows. This one traded just so many times, just pulling it down to each new low. And the last time it traded, it has now blown out and through targets. So it did not trade any of these new lows beyond the target at 91.70s here. Each new low, we never traded all the way up into the next in the series short. So what this means is we're blowing out of targets, and we need to draw from the 93, roughly 20, but 93.22 to 24 low here. The low before we filled that extension to new lows. Okay, the low to low, brand new extension short. We can remove the old one now. And we have resistance at a 91 area. Okay, now what's important to note here is that going down to a 15-minute chart, the series of shorts down off of our prior high, the highs that took us down into these 88 lows, the 93 high, the series that took us and is trading down lower here is not completed yet, or has not been invalidated. And we can take a look at what that is. So some kind of micro off the high went into, we had extension shorts. Extensions went into new extensions. Those extensions went into new extensions. Those extensions went into new extensions. And that extension is drawn from a 90.52 anchor to lows here. It traded once to target, twice to target, and now same anchor, new low. This to the lows this morning at a 88.80, the lows before NFP right here. We traded straight up into that short. We came down, went into a new low, and after going into a new low, we actually broke a full short off of the Spike News rally high. Since then, we have actually pulled into an ambush long. I'm not saying this ambush long was a take or is going to continue to hold, but it is there. And so we have a micro ambush long going against this extension short. And so far it looks like we're just starting to compress in a range and maybe consolidate, and probably we'll close the week. We'll close the week sometime right around here. Very likely. It can go lower in the extension short. It can trade to this micro's target and still be in the short. But seeing this micro hold is the first indication that of a little weakness against this short. It would not have been a trade I would take. We're against an extension short on a larger time frame, but above an 89.90, there is the potential for an ambush long on a 15-minute time frame, taking us up in the direction of the 90.95s to fill that new that new full short. So that's the short. That's where I want to be short from up above still, in that larger hourly extension. The 15-minute extension short has traded, gotten free. They have downside targets. There is a micro off the lows so far. It is holding so far, and has the potential to maybe start something against this extension short. But otherwise, this is looking like we're just going to go sideways the rest of the day, and it's virtually untradeable unless you have been good about maintaining the series of shorts down off of highs, which is the biggest difference between the Aussie dollar and the Aussie yen right now. Is the Aussie dollar is holding extension shorts, whereas the Aussie yen, which we can talk about now, actually broke theirs. So stepping out to a 4-hour chart, no, more importantly, actually, let's step out to the weekly chart so that we can take a look at where we are in reference to this big weekly next to the series long. And this weekly long, maybe we'll pull up, if you give me just one moment, I will pull up a profit, which has much larger time frame. Well, it has more data. Okay. Here we go. So the Aussie yen, coming from these lows of 2008, we traded into a full long off these lows. This full long has gone to its target, and there was the potential for new extensions that never held. So extensions failed. No short off the high traded. Absolutely no short off the highs traded. No full short anyway. Okay, we were in extensions the whole way straight down. The full long hit targets. We drew up the next in the series long from entry lows to target highs, and we had an 88.70 next in the series long. We're dipping into that level now, but what's important is going down to, and now we can go down to, so you can see the rationale for this pull and why it's the next in the series long. We can go down to our 4-hour chart and take a look at, okay, where were we in the series down off this high? And it's actually a pretty clear series to see. We had extension shorts, or I'm sorry, we had a series of shorts here that broke out of their targets, and using this 96.05 anchor to lows, we traded an extension short. This is the 96.05 to the 90.50 lows. We traded an extension short at the 93.30s, and it went to its target here. Same anchor, new low on this 4-hour trend, flagged for half the summer here inside of this extension short, and finally went down to its 87.25 targets. Filled the targets, and now we're anticipating same anchor, new low on the 4-hour time frame against this big weekly. The break of this 4-hour extension short would be the signal for a potential 4-hour pullback in the direction of the daily or weekly swing. That has not occurred. So now what we need to be aware of is, what is the series that took us down off of prior highs? What happened here? Just like we did in the Aussie. Go to our 15-minute, maybe an hourly chart. I think 15 minutes should be substantial enough to see the whole leg down. Yes. So this whole leg would be important now to determine what happened here. Well, without getting too complex, we can just start finding where our extensions were. 91.40s anchor to lows, extension short. Blew out of targets. 90.60 anchor to lows, extension short. Blew out of targets. We then began new extensions that traded once, to target, blew out of targets, and then using the 88.80 anchor to lows, we began new extensions, traded once, twice, blew out of targets themselves. Same anchor, new low, actually failed on that pull. But the last low that the extensions traded, and this is where now going down to a 5-minute chart will be handy because this is important. So we had our 88.80 anchor to lows, trading extension once to target. After the extension targets traded, same anchor new low, traded again to target. Same anchor new low, never trades. So we need to mark this 88.07 anchor. And this is important because this is the equivalent of the anchor in the Aussie that is actually still holding, the Aussie dollar. So this anchor at an 88 at 5:45 on 7/31 well, let's even go back and hold on, 7:30. Either way, it's like the next in the series, the next one that should have held. Anchor to low here. We had a big stop slide, right? Traded up into the extension got free and eventually broke. Before it even broke, there was already a long that was holding against it. Then blew out of targets, they started extensions. Same anchor new high on these extensions, got participation and traded to targets. Same anchor new high again. You can make an argument traded again at the news, then eventually failed. Upon failing, we have not had any short off the high and no full short off the high. What we did was we pulled back into the full long off of lows. So we had a break in shorts and we've pulled back into the full long. This full long, however, hit the 61.8 line, but the question is, are they really just the first time this ever traded? And this is kind of an aha trade. The first big pullback we had was a massive front run of where we anticipated the full long, ambush long trading. To me, this looks very much like we are actually filling the original 88.02s. Because remember, those are the highs from the day that we actually broke our series of shorts. Okay? So the highs of the day that we actually broke the shorts, the full pullback, it's like the algos use that high and have their orders resting there. So the last update on our trade, we had put in a the stop we were using was actually below this original level, and there's a reason for doing that. Nevertheless, either one of these levels, whatever you want to consider it, looks like it's trading. And most importantly now, though, we want to go down to like a 1-minute time frame and take a look at what's coming down off the prior highs here, because this is important. So there was a micro short a traditional, went to targets. Next in the series, traditional to targets. Next in the series, traditional to targets. Next in the series, traditional actually broke. There was a micro long that actually got free and took us up to get into the, filled our entry orders. And then it looks like you can make a case that this was actually extensions trading here. Now same make a new low on these extensions, potentially having traded again. So kind of like the dollar yen, I need to see this above an 88.45 to feel good about this position. But currently, I mean, it did trade along off the low, and it's pulling. Looks like it might be pulling back into that same support area. So we'll see what happens with the Aussie yen. It's definitely not out of the woodwork yet, but this I will say this about it. Unless it really falls to the floor right now, there's. Hold on, bring up the study, add study. And this is one of those things that I'll put up just to kind of make me feel a bit better about the trade, even though I don't trade off of it in any way. Look, we're in the trade regardless. We're actually seeing divergence. Continues. So like, as hard as this sold off, the lows are the three-wave move down here. Okay, there's a... So in Elliott wave, the only way I ever used to trade Elliott wave was using an oscillator. And the way you do it is this right here is a five-wave structure. This is how a five-wave structure looks on an Elliott wave. You have wave 3 of 3 top, wave 4, 5, 4, 5, 4, 4, then wave 5. So you see this divergence like this if you're going up. That's 5 waves up. Just like when you're going down, you see this divergence. This is completion of a 5-wave structure to the downside right here, where every new low diverges from the prior highs. That is a signal of an impulse. The signal of corrections, this is the type of structure you get right here. This is an A, B, C correction, and that's what you see here. From prior highs, you have the A wave down, the B wave up, which actually has its own A, B, C wave. So when you have corrective price action, it looks like it's expanding, and impulsive price action looks like it's coming down. Now, what's important here is the fact that this C wave is actually not, and is confirming the idea that we have the prior lows. We are diverging from the prior lows in the oscillator. In other words, it was unable to break the momentum of the prior lows, and that's actually a bullish signal. And the fact that it's the 15 minutes turn bullish, you can look at the 5 minute and see what's happening too. So you'd expect this to occur on the 5 minute now, because oscillators unfortunately they're like delayed. So we could just go straight sideways here, and you'll see this kind of come down still before heading higher. So regardless, it's not like a perfect science, but like helps me feel better sometimes about a trade. I don't trade off of it in any way. And then you can even go down to the 1 minute, and you can see how we're losing momentum to the downside now, and you want to see this curve curve back up. So with downside momentum totally waning, and the failure to make new lows, but we are new lows in both the oscillator and price together, that's a pretty good sign sometimes of exhaustion in one direction or another. But regardless, we'll see what happens with this trade. It's not out of the woodwork yet, but I wanted to point out that like my age-old my old methodologies of trading actually would support being a buyer here as well. And it would, I wouldn't have been a buyer until probably these lows right about here, like on this move starting to come back up. I'd start to be buying it on the dips now. Is how I used to trade it. But anyway, if I was trading Elliott wave structures, and I had a lot of success doing that, but I found using the methodologies I use now a lot more helpful. So anyway, just wanted to throw that out there, but we are, the short, we can definitely make a case for an extension short herd trading, which could take us down and through lows, which if it does, honestly, if we go below the current lows, I'd want to be out of this trade and run away from it. So with that being said, have a great weekend, everybody. I'll be around the rest of the day. Kind of just keeping an eye on this trade, but for the most part, I think the day is pretty much closed, and you'll just see some consolidation into the weekend here. I will take the Aussie dollar home sometime on Sunday. I'm going to wait till after the Aussie US dollar opens up, just in case it gaps down, because the Aussie US dollar is looking like it could very well gap down to like an 88.40 area. And I'm just saying that because it's in this extension short and it's got downside targets. So doesn't have to, but who knows. Anyway, I will be updating the Aussie US dollar orders on Sunday. I'm not going to do it until then, until after the open. But have a great weekend, everybody, and we'll be back with you as price action develops. Oh, actually, one last thing. Almost forgot, gold. Big level in gold just broke. So all week we were watching gold flag inside this extension long, which is shown in purple, and that big daily extension short. The extension long has now broken, and after breaking and into FOMC, gold pulled into a full short off of its highs. So it's looking like shorts are taking over control in the gold market and could potentially open us up to a move down to the 1,100 and ultimately the 1,000 level, which is where want to remind everybody where the grandiose all-time full 50% long in gold would be, and that's just drawn from zero to all-time highs here. Okay, so all right, now I'm done. Have a great weekend, everybody, and we'll be back with you as price action develops.